Hello and welcome to Budget Simple Hai, brought to you by Aditya Birla Sun Life AMC Limited. I am here in a room where 4.5 lakh crore, I don't know how many zeros that has, you can calculate. 4.5 lakh crore worth of investor money is managed. Very heavy, isn't it, that number? I can see a door there which says only bonds can enter here. I can't. I'm not James Bond. And there's another room which says where equity becomes an opportunity. This is where all the crunching, all the number crunching of Budget 2026 is taking place all around here. And then the positions and what and where to invest in is being decided in those two critical rooms. Budget probably had a lot of expectations that came with it, but then markets. And I learned one thing when I started my career, and that was from legends like Balasubramanian, who will be joining me very shortly, was that the market knows everything. And in Hindi, if you say, it says, Bhav Bhagwan che, means everything is in the price. Yesterday, the reaction of the market was certainly of a kind which didn't approve of the budget. Was it just the STT? Was it the current situation that corporate India and the markets face and how the budget addressed it? There is no doubt that it was a work in progress budget. There was a vision already outlined, and it continued with that vision. But to understand all of this, joining me today, as I said, will be the legend, more than 35 years experience in the mutual fund industry, in investments, debt, equity, and running this wonderful company. And joining me also will be the CIO for equity, Harish Krishnan, and the CIO for fixed income, that is Kaustubh Gupta. We're coming to you live here on YouTube. Hi Bala,
hello,
wonderful
hi,
meeting you. How are you?
Fine, thank you.
If I count the interim budgets as well, it must be 45, 50?
Must be, yeah. Close to the number.
Because yes, we've seen years when there were 2, there were 3 budgets as well.
Yeah, right.
So I think we're all
now of course outside.
Less excited about the budget.
This is the first ever budget presented on a Sunday.
Oh yes, absolutely.
Yeah, and made all the money managers to work on a Sunday.
But you anyway work on a Sunday.
Of course, I am an exception, but
every time I meet you, I was telling your younger colleagues the kind of energy you bring to the table. I was still remembering 10 hours of road journey together with you.
Yeah, right.
And you were fresh like a daisy.
Yeah, Yatra, Digi Yatra.
Tell me, Bala, yesterday we saw a very ferocious reaction from the market. And even in some of the comments that you have already announced.
Correct.
You have said that it is a budget which is laying the foundation for long-term sustained growth.
Correct.
Now, markets are like human beings. They are emotional, so they look at more the immediate situation. But if you could outline for our viewers of Simple Hai, where we, and you've been on the show, we try to decode it very simply. Do you think that the immediate reaction has been a bit more than it should have been? Or do you think that while on the long-term side everything is fine, and I'll come to certain questions on the short term.
Sure.
What is your first reaction to this budget?
So when I was listening to the finance minister, the way she was narrating the 7-point agenda,
yes, the
7 sectors highlighted, how they are going about building the Vikshit Bharat for to become true. And each of the steps, the way she explained, I was turning extremely bullish. Because she is addressing points that are more relevant for India, especially to stay resilient at this point of time and grow faster than the rest of the global economy, and yet face the challenges that is coming from a geopolitical risk, including tariff, and India should stand apart compared to other nations. Therefore, if you look at from that angle, the budget has been one of the best ever budget, I would say. In fact,
Really?
I rated the budget on a 10 scale, a 10 to 10 I scored, because it's the one good thing that has also come in is about putting out the roadmap, not for 1 year, for say 5 years and even up to 2047.
Yes.
So, in the past, never in any of the budget has given a tax holiday for setting up data center till 2047, which I thought this is something they are looking beyond the budget and to make it more sustainable, giving more visibility to who is investing in India from abroad, as well as the people are investing in India. They should have the long term visibility. Of course, market always looks at what is it for me, and I mean what is it for me market. It is the capital market.
Yes.
So, capital market looks at a few things like change in the capital gain tax, change in the income tax, and change in the excise and other structures, and also change in the related to the security transaction tax. So, what came in security transaction tax suddenly turned out to be bit unexpected. On the contrary, the market was expecting, though it is unfair for the market to expect to change the long term capital gain tax, but there was some kind of feeling given the fact that the FIIs have been out from the market. So, is there any reason for that capital gain tax to be reversed at this point of time, so that more FII flows can come? But of course, FII flows do not come to market purely on the basis of the taxation. They of course look at the broader relative the outlook that they have the rest of the global market. That is the way they look at India. So, that is one came as a somewhat expectation not being met from the market traders point of view. Second is STT is something introduction. If you look at the intent of the government versus how it is being perceived, the 90% of the people who trade in the F&O market, especially the retail, do not make money. So, I think government is also have over the cap of carrying. So, I think the budget also over the cap of carrying for youngsters, for traders who go actually trade in the market, speculate, but do not at the end of the day make money and out of speculations, and therefore, they must be curbed or encouraged not to pursue that as a way of investing, and by only way they can do it, they cannot say do not trade, but can always make it costlier. So, therefore, STT is actually with that intention they seem to have done.
That's what the finance minister clarified. That was the intention. But Bala, since you manage both retail and institutional money, the whole idea of derivatives was to be able to give big investors, and of course, you do not discriminate and say big versus small, you can only put an entry level.
Correct.
But I am told about 10 to 12 lakh crore, which is put into F&O, is by institutions, including FIIs,
Correct.
including in some cases funds like yours as well. But that also gets hit, isn't it? So, in the attempt, your intention is right,
yes,
but you have also hit large money which was anyway coming with a lot of difficulty.
I would probably tend to bit disagree on this, though the derivatives market provide much necessary the depth in the market for the cash market, and also bring in some element of the speculative nature if it is there in the market. The expectation of price movements also come along with that. So, having said that, from a cost point of view, this will be a smaller proportion of the overall cost that we incur. It actually is not going to, is not a game changer, or is not something that is going to eat away the return that could come from the market, or maybe buying in any either the stocks or using derivatives for hedging your portfolio. This is very small cost that you pay, but the gain that you are aiming for, I think that is what money manager, I am sure two of my colleagues, Harish Krishnan
we'll
and
talk more in detail on the numbers.
They will speak more on details in terms of.
As you rightly said that if it sounds big like 50% jump, but the government, to be fair, has done that with gaming, they have done that with all speculative, addictive,
Correct. So that's why I just want to highlight about the carrying part in budget when I mentioned about the carrying part. One is of course F&O, the introduction is about carrying, I would say. The second carrying I would say is they have gone about, they understood the needs of mental health.
I was very happy.
I was also very happy. But nowhere in the budget it would ever gone so much in detail. That you not only focus on health and hospitality sectors and providing employment and create more health workers in the country. So also equally they given importance for mental health,
which has never been recognized, never been, and I think that's phenomenal. And you yourself personally are very involved with the healthcare sector in your own personal life.
Therefore, that's something which I liked.
I like that.
It's not everything linked to the put one or two numbers and say it will have so much of financial impact and so on and so forth.
Yes. And also the medicines, cancer for example, and she said other rare diseases, the medicines that are being imported. Duty cuts on that. I mean, I think that was also very significant.
The starting statement itself is focusing on biopharma.
Absolutely.
Essentially making it India more inclusive growth. How do you drive it? And India has got a huge potential given the vast population, the rich heritage that we have in terms of right from medicine to technology to various other areas, and especially on the industrial side. We have a lot of strength that we have. And therefore, this budget has gone about building each of those strengths that we have. How to make it more institutionalized way of that we can drive it, including legacy industrial sectors, giving some kind of impetus. We have the capability, but have we changed actually our business model over a period of time to be in line with the rest of the world by putting technology, people, and that's something again they are keeping a budget. These are some of the things I would say innovative. Deep enough deep thinking that they are given in order to make it more sustainable. As a result of that, many companies, even the MSMEs, for example, creating a champion. There are many small size companies in India have had huge capability. I was talking to one gentleman, very small size, 20 crores turnover company, but he makes one of the nuts and bolts which is basically used in the airline industry. Critical component of airline industry is coming from him. But for that equipment,
how do you help them scale up?
How do you help them scale up? That's something they have identified as one of the area of focus. Therefore, broader basis I would say is good.
You also said in your statement yesterday that it will help to deepen the bond market. What did you find in the budget that will help deepen? She talked about municipal bonds and incentive to come directly to the bond market. How else do you think this budget tackles?
So, we were hoping that the budget will bring in some kind of tax element for the bond market development, so that more money can come into the mutual fund because there is a tax benefit they get. At the same time, like equity market, bond market also provider of capital for expansion. Even today, Government of India themselves do borrow quite a lot. But I think they have understood the importance of developed bond market. Instead of giving a tax incentive at this point of time, I think they seem to have focused, or rather they are quite confident of building an institution that can do the market making for the bond market development. And that's something I am sure will come out. Like high level committee they have announced would be set up to completely relook at the banking system, especially public sector banking system.
And also the nudge to the municipal corporations that I am willing to incentivize you, go directly to the market and raise bonds.
Correct. So, I think they have given a lot of importance for REIT and InvIT. Where the public sector companies have got a huge amount of land parcel that they have across different parts of the country. How do you monetize them? So, they now put out some kind of methodology through the REIT and InvIT, they can actually monetize it. The same way, municipal bonds, they have identified about 7 or 8 city development centers, which essentially means those municipal corporation also needs fund today. If they all get funds, municipal corporation gets fund over a period of time, which you and me as a citizen of the country keep paying our taxes and other costs that we pay for usage of water and so on and so forth. But that comes over a period of time. The recurring of that thing will be quite large. But can we also encourage this municipal corporation to issue bonds to get money today for the future development? Therefore, we need to have a good amount of bond market vibrancy should be there, more participants should come and support these kind of bond issuances for it to fund the future needs of the country. That is something which comes. Therefore, from a broader basis, this budget at least have got some kind of importance that they are given for the bond market development.
You've
So,
always
because it come from the budget, I would probably say they would make it work.
Let's talk about 2-3 immediate challenges and whether or not, and I'm not saying the budget had to address it, a lot of things happen outside of the budget, but could the disappointment be because of that as well? And that's something I'd like to pose to you. So, for example, one of the biggest challenges today which is facing the market is the earnings turnaround. And even in the quarter that we are in, a lot of companies have had to provide for the new labor code.
Yes.
And while there were many who were hopeful that the earnings, and of course I'll talk to Harish more, but more at a larger point from you, did this budget give you the sense or the market the sense that we are cognizant of earnings growth not recovering as it should have? Second point, Bala, private capex.
Yes.
Government has been bearing the load and capex from the government has only gone up, which is great. Otherwise, God knows where we would have been.
Correct. Correct.
But the private capex cycle is still not turning. So, is there something this budget could have done to clear that? Did you see that in the budget?
Yes.
And the third, FII flows. I mean, it continues, and along with it is the rupee weakening.
Correct.
Does this budget, or would you say the budget was not meant to do that? But that's what everybody expects from the budget. It's not just personal tax. We individuals feel happy about that. But
Correct.
as a market, you want to see that, right? I
Yeah.
mean, does it address these issues?
So, I think budget has addressed many of these issues by bringing in policy framework.
Okay. Can you
Keeping aside allocation, like capital allocation.
Yeah.
So, they continue to maintain close to about 12 lakh crore capital allocations. They identified different sectors like biopharma is one, the semiconductor is one, the electronic manufacturing is one, where they all increase allocations. Wherever they have seen success, they have increased allocations. In fact, there was a statement came from Apple CEO just about few days back in the US, appreciating the manufacturing activities they have undertaken in India, which has been the second largest producer next to China, to support Apple growth in overseas market in manufacturing mobile phone in India. So, we are seeing now progress in each of these areas. Second, they have also identified the rare earth minerals. It's a new business opportunity, and identified certain states in which we do possess the rare earth minerals, which is the most need of the hours today, which is widely discussed globally. That's something we identified. In order to connect the respective states, they have also given some allocation towards the waterways. And last about focus is about skill development. I think you talked about the labor code. Labor code is also about one, giving money in the hands of people, especially below 20 lakh rupees. It's not something they are not given to everybody below 20 lakh rupees. They have defined some kind of methodology for the whole country to have a uniform policy, uniform salary structure, the uniform way of driving things.
Which is very welcome.
Which is
that
very
was a reform.
Correct. So, that's something they have addressed it. So, the skill development program that they have now announced, almost about 20 lakh employment that can be created of various steps that they have taken. Therefore, from budget point of view, we will have to only look at the allocation towards various sectors, which is the capital sector, capital goods, the capital expenditure, which actually the one, the key to look at it. That is something my own belief is they are not cutting it down, and they continue to increase it and continue to identify new sectors that can benefit
And you are
out of
saying
this.
that's all the government can do really.
Correct. Private sector capex, which I am sure Harish also will give you more number on this. He has some numbers which can actually justify how the private sector consumption is picking up, investment is picking up. But in the last few years, number of sectors in which private sectors have come on board, especially the new age business like electronic manufacturing,
Right.
even the semiconductors. There are private sector participations that have started coming in. Overseas investments, they also started coming in, especially in the state level. Even states have been luring foreign investors to come and set up their own industries. They are giving a lot of the facilities like tax holidays or maybe land at a relatively cheaper price. I think at the state level is happening. If you look at the traditional private sectors, Indian conglomerates who have been in the business of manufacturing for long, they continue to expand their own existing capacity. Cement is an industry, if you see, they have increased their capacity, and paint and industry has increased their capacity. New capacity is coming. So we have to look at an overall basis. The number doesn't look that bad. But of course,
could she have done more for exporters? If you see the last 6-8 months, I'm sure, Bala, every morning you wake up, you see one new statement from Trump. And imagine the havoc it has caused in some sectors,
Correct.
especially for exporters, right? On the one hand, we are trying to, look at newer markets and governments making progress on FTAs. We've just closed a big EU FTA, New
Correct.
Zealand, and many others. US is still open.
Correct. In fact, I must mention on this,
yes,
since you mentioned about FTA with the EU. Morning I had an opportunity to have an interaction with our Honorable Commerce Minister Piyush Goyal.
Yes.
It was organized by National Stock Exchange with about market participants, just to get a feedback on budget, quick feedback on budget. One of the interesting that he mentioned, which I really liked, the power of signing of FTA with the EU. When you look at the EU, we look at BMW and Mercedes and high-end car segment. And he made one interesting point. 90% Indian automobile industry, especially the passenger vehicle manufacturers, do not get impacted on the basis of the EU FTA trade, because there are high-end cars where we will get the benefit. Defense will get significant benefit. One of the bigger industry, which is the farming community, actually produced in India. They never realized the power of farming community, especially in the alcohol and oil manufacturing, which is using the grapes. And European Union is actually one of the best in terms of making agriculture produce to generate huge business opportunity on wine and alcohol. They have identified that as a sector where India has actually underutilized the farming capability in India of grapes, and how actually created allied industries along with that. They have identified that as one of the area of focus. Therefore, when you look at the trade with the EU, it can actually long lasting impact that could have in multiple sectors getting benefit. Second is within EU there are many small countries, and each of them apparently had very minimal investments in India the last so many number of years. Because each of the countries, when after signing the agreement, looking at tax holiday that they are giving with the pure commitment for long term, the more and more countries like Switzerland has already committed about $60 billion, New Zealand has committed about $20 billion. So these numbers are actually, if you add up all those things, I think it can be very powerful from the progress point of view. And the US tariff also, I think we are progressing quite well. My own belief is, it looks like we seem to be coming very closer to signing it up, though there is no public information available.
I know,
but I can only go by the pulse that we gather.
Sure.
But I think if that comes, probably I would assume the flows can reverse. But coming back to the exports that you mentioned about, I think India's service exports is one of the highest among the various exports components. Service export is the largest. I think with the rupee dollar being on 91.92, I think we are anyway become one of the largest beneficiary of that. And second is sectors like textiles. So this time,
which is one of the
budget,
7 she's talked about.
correct. The budget she has addressed about how textile industries actually is quite fragmented in the systems. It's quite spread across the country, and they have now talked about creating a park, a textile park. It was there last year budget as well, and I am sure they would also realized what are the things they have not done for it to become successful. They simply putting things in place this budget. That's another area focus. I think they also mentioned about countries like Bangladesh has got larger exports, whereas India definitely deserves to have be leader in the textile exports. That's something paid attention. I think if you look at deeply, I think they are addressing each of the areas. For example, chemical we are importing a lot, can be produced of course within India. Then have identified chemical SEZ kind of zone, so that chemical manufacturing can in India, then we can export rather than importing it. So these are some of the steps they are taking. I think currency is something, it's a function of flows. I think Reserve Bank of India has been on top of the job in terms of ensuring intervene at the right time, at the same time let go rupee to depreciate depending upon how the outflow happens. But I always see that rupee depreciation in some sense would have also taxed the FI's outflow when they move out, though it is not intended that way.
I know.
But definitely would have some. That's why if you look at it from a foreigner's point of view, return on a rupee versus return on dollar. Return on dollar is actually lower than the return on rupee. At rupee term they have done very well, but at dollar term they have not done well. So in some sense it is rupee depreciation has also reduced the overall return. While of course it is good and bad to have, but I think fact of the matter is a question of time for the rupee to just stabilize. Of course, in the current market conditions worldwide, if you look at all currencies, whether it is Japanese yen or versus US dollar and India and the Chinese currency, only one has done for exceedingly well, and we have been seeing stable currency in Europe as well as sterling pound. And with these dynamics, I think India rupee depreciations I think would have come in handy from an exporter's point of view.
Bala, you have always said markets are a slave to the earnings, and while I will dig deeper with Harish in a bit, but when do you see this earnings cycle turn?
So, if you look at the moving parts, maybe in the last almost about 6 months or so, the step that is being taken, it has to boost the consumption. I think GST, the complete revamp, which the Minister of Finance announced last year outside the budget.
Yes.
This already started playing out in terms of the company's outlook for the future. Second is interest rate has been cut. I think today the cost of capital in India is very reasonable for anyone to get into the business. Interest rates have been pretty low from the borrower's point of view. And third is per capita income, thanks to the agriculture output. Even this year too, good thanks to good monsoon, agriculture output has been very good, and the focus that is being given on the rural India also increasing the overall per capita income for people. Therefore, all these things will lead to a better spending habit and also better earnings improvement that could come from companies. So, I think we are already seeing that in terms of progress. It is just a question of time for this to actually get more momentum, which I am sure both Harish and Kaustubh would be able to give some more insight on this, but I think I am quite hopeful that earnings to come back this year. Plus, given the fact that our markets have remained somewhat sideways for the last 1.5 to 2 years, you can also say that we have gone through our own period of time value correction. To the extent we would become more attractive even for foreign investors to look at India compared to other markets.
Bala, events come and go, and we've had budget is a big event, but other than that, in your career, in my career, we've seen wars, we have seen all kinds of events that happen and affect the markets, some positively, some negatively. But if I am an investor, and this is one of the questions that is coming in, for someone doing SIPs every month, does this budget change anything at all, or is it business as usual?
I think business as usual. See, SIP itself, I call it as a recurring in nature. It is supposed to be recurring in nature. When you save in the form of recurring in nature, you are not saving it for today. You are saving it for your future need. I am not even saying want, I am saying future need. Everyone has got the future need to be generated. Therefore, SIP is something, it is a permanent, let the market come and go. I think market will go up or go down. I think what has remained constant over a period of time is the upward trend remain constant. So, I think whenever in the, as I always say, even in a human life, we go through our own ups and downs. In a life cycle, 2 times Sade Satsani comes and then goes. And everyone gets worried during that period of time.
That's what somebody is writing. Okay, when a market falls 1800 points in a day, dar to lagta hai.
I know. Dard lagta hai because of you are seeing your portfolio. Don't see your portfolio. Don't see your portfolio.
Continue just
and
the
continue.
way you are.
Yeah. Because you must also appreciate the same portfolio gave you good return. That give you a joy. And same portfolio when a market falls, it gives you sorrow. Because both will coexist. But on either side, you have to stay quiet. Either side, of course, listen, see your portfolios, they are all fine, but don't react and don't get too excited do not get too much worried. But at the end of the day, as an economy, I think we are going to go towards the 10 trillion economy, even beyond. Therefore, the economic growth is remain good. Even government of India, even this year, they know very well that they have not been extremely successful in closing some of the things which were to be done by the government, and like tariff, US tariff, still done the negotiations. All these they are doing it in the best interest of the country. Therefore, we have to give some time.
So, governments will do what they have to do.
Yes,
We should do what we have to do,
yes,
which is keep our continuous investment going.
yes,
Be patient. I was seeing some mailer which came yesterday which said that one of your schemes in 30 years, and many have crossed 30 years now, 186x.
yes. Some of the SIPs what somebody has done in our flexi cap fund.
186x.
Yeah.
I mean, index would be 40x,
Yes.
maybe, from 2000 to say 80,000 on a Sensex. But that doesn't mean that you are not getting more returns.
The 180x coming because you sat through the investment through this journey.
Yeah.
And you continue to stay with your investment through this journey. If somebody has got chickened out in between,
Then they
and
lost.
then you would have lost. One thing we must always remember, once you get chickened out and move out of the game, you will never be able to come back to the game. And even in real life sports we see it, that once you get out, you can't come back to the game. So I always say in the SIP is something is continuous, you have to stay in the game and continue to keep your investment and reap the benefit only over time.
You are fond of cricket, so let me ask you, do you think the market was expecting a run up to the T20 World Cup, and what it got was a great test innings?
And in fact, Harish Krishnan is more clued on to cricket than myself.
What do you think?
No, I think the
It's
market
playing for the long term,
it
the
is
budget, whereas market thought things are troubled, we are off our highs, we will get something.
yeah. I think the way market reacts is anyway. It's market reaction is a function of the nature.
Yeah.
The nature of the market is actually react. The expectation set by us, and expectation not being met, realizing is also us only. So therefore, I am talking about market players. So this is something always happens in the market. Every budget I have seen historically, you will see this euphoria coming for a day lost. And from a government point of view, they have done everything that is possible all these years, and they continue to do what is possible even outside the budget as well. Therefore, budget is should not be the one document for you to consider the investment. I think they are doing many things outside the budget. All of them are to ensure that we as an economy continue to grow, and as a country, companies perform better and better, prosper, people at large prosper. Therefore, we are able to actually become one of the third strongest economy in the world, which essentially means our market cap. If you have to link it to the GDP, it has to only go up. So, the only question is what period, the period can always change. I think what is most important actually is like our lifetime. The average
And what
lifetime
you are
for
saying
80.
is, Bala, that in the current global disorder that
Yes.
is going on, to expect a budget with a roadmap of 10% growth would have been asking for too much. Even a 7% growth is something great at this point of time.
Yes. I think they have done it with the 10% nominal GDP growth, which is nowhere in the world 10% nominal GDP is there, which essentially means whatever the building blocks they are doing at this point of time, all of them are eventually will lead us to the
When a tailwind comes, we will
lead
be
us to
better
that. Correct.
poised.
Correct. Therefore, being optimistic, I think, is extremely important.
You are always optimistic, and you are always smiling, and I wish that you continue to create wealth for investors across the country. And it's a privilege to be sitting here where all the action takes place. So thank you very much,
Thank
Bala,
you, thank you, Vivek.
for
Thank
inviting
you.
me here.
Yeah,
Thank you very much.
thank
Lovely
you.
speaking.
Yeah, nice speaking to you. Thank you.
All right, so we now dig further deeper, and joining me now, as mentioned by Bala and me in the conversation, is Harish Krishnan, who is the CIO for Equities, and Kaustubh Gupta, who is the CIO for Fixed Income at Aditya Birla Sun Life AMC Limited. Thank you very much, Harish and Kaustubh.
Thank you, Vivek. Welcome to our office.
Thank you very much. I know. I love that Bond bit, Kaustubh. and you look like the guy who can actually walk in.
Thank you.
Yeah, you look the kind. But tell me, I see a lot of calm here. There's no tension on anybody's face, despite an 1800 points fall. You seem rather calm. So is it like, was it a reaction, as Bala just mentioned? We are human beings. Markets are emotional. We react. It's nature to react. What are your immediate readings? Though now you've had time to crunch through with your team on a lot of things, but immediate reaction you think was an overreaction, or were there something more that the market was expecting that it didn't get?
Sure. So the way we kind of look at it is that this, over the course of the last 15, 18 months, if you have, is like a reboot moment for the markets, right? There have been a lot of events which have happened, which are kind of questioning the global world order, if I may, be it the geopolitical setup, be it the war that we've seen of some kind, as well as the tariff uncertainty, right? Now, in this kind of a scenario, the policy makers have kind of refreshed their arsenal, focusing on newer things. Okay, so what are the vectors that they broadly kind of focused? And I'm just not talking about yesterday's budget, but I'm taking a slightly longer stance of all the things that the policymakers have done. Okay, which is that a greater focus on the domestic consumption. That has been one key pivot, so to speak, that the government has done. A focus on growth rather than just macro stability seems to be the broader message coming in from the Reserve Bank of India, as they try and press the pedal for greater transmission as well as greater credit growth. That is the second key vector. The third key vector has been the fact that among the entire equations that are starting to come through from a tariff perspective or from a trade perspective, it seems that rupee is seen to be the area where they have got the power to kind of give some kind of competitiveness to the exporters. So that is the broader kind of a policy response. Now, as investors, therefore, for us it is important to take a fresh guard. Okay, this is not business as usual. This is not about looking at, say, the winners of the last 3-5 years and believing that they are going to continue their stride going ahead, because these kind of distortions, if I may, require a fresh thinking, and that is exactly what we think over the course of the last 15-18 months. We kind of gear towards the newer set of opportunities, a newer set of sectors which may be possibly be under the radar, which may be under owned by, say, the street and various market participants, and which have the prospect of certain surprises in earnings over the course of the next 18, 24, 36 months. So the key, as you rightly observed, it's reasonably calm despite all the chatter that's around, and that's primarily because we are really geared for the medium term and the longer term. We really have no edge to predict what the markets will do today. We have no real edge to say where it will be a month from now. So why at all get into that game where we have no real edge? Rather, let us try and see where we can gravitate our portfolios towards the newer set of opportunities, and that is what we kind of do. And yes, so in that sense, we kind of look at this policy statement of the budget from that lens. It is just one tool that the government has among the series of reform orientation that they have done over the course of the last 15-18 months. And what the other key aspect is, and I think Bala alluded to it, that a lot of seemingly quote unquote reforms now seem to be happening outside of the budget, right? And therefore, one shouldn't just kind of lay on one reaction, etc., that the market may have. We continue to remain constructive on equities, just that we need to play the test match, not really.
Yeah, that's what I asked Bala, and he said Harish is the cricket crazy guy. So is it like a test match budget?
Absolutely.
We set a certain path. We are going to go every year, keep playing, let things settle down in the globe, and then we'll. Whereas market was somewhere expecting a T20 innings, that the world is in disorder. Let's go out there and announce some big bang, hit some sixes. That didn't happen.
Yep. So
except for the STT, which was like a.
No, but
different-
I think that there are all kinds of pitches, right? Even in a test match, there is a day 4 pitch, there is a day 5 pitch, etc. And it is important to understand that the broader setup of the world order is something which is in massive flux. This is not a business as usual kind of a setup, right? And therefore, it is also important to be fiscally prudent. It is one thing to go on steroids and say that I am going to take on any amount of debt, and I am sure my colleague out here will have a lot more to say about the conservatism. And it's another thing that what you have, try and direct it in ways that give the maximum bang for the buck. And so while there is a sudden disappointment with respect to the securities transaction tax on F&O.
Does it affect me as an investor in a mutual fund?
Not to a significant extent, in the sense that we use futures primarily on the arbitrage side. So for those particular schemes, yes, has the cost gone up a bit? Yes, absolutely. Similarly, for certain hedging mechanism, we may be
Or
using
like the
futures.
new SIFs which are coming?
Yeah,
maybe in
to a
those?
certain extent, yes, those costs go up. But again, is it something that is day and night? The answer to our mind is no. At the end of the day, we like less friction, a greater transmission, etc. But you got to adjust to the new realities of the game, and then kind of put your best foot there. So I think from investor point of view, this doesn't really change anything. For possibly the day traders and the quote unquote speculators, possibly there's been a significant upping of their cost that they need to kind of factor in before they kind of do into this kind of a path.
Kaustubh, coming back to you, Harish, on the earnings part and other factors which are impacting the market. But Kaustubh, in the run-up, when I was speaking to people, there were a few market participants who said that the finance minister should just not think about it, the fiscal deficit. The world is in disarray. Let us go full on, and in all the commentary that one has read, so far, everybody has praised the fact that you stayed on course.
Yes.
So if you could explain to investors why this was so important to stay the course. I mean, COVID years were different. It was a one-in-a-century event.
Yes.
And as Harish said, you can't just keep, shooting your fiscal deficits. So if you could explain very simply that why staying the course, maybe you've come down a notch, not too much, but staying the course was so important.
So from a cricket analogy, look, we are probably in the day 4, day 5 pitch, where the pitch is clearly deteriorating, and you need to, when you are chasing a target, probably the better way is that you conserve your wickets and chase the targets. In a financial world, what's happening is that, especially in current regime, the geopolitics is the flavor of the decade. And in this geopolitical setup, the only reason that India is still being resilient is that India has focused last 15 years actually on macro stability, and this budget further reinforces it. The single most important reason that today India has standing out is that we have focused on fiscal prudence, we have focused on inflation being under control, we are focused on better quality of expenditure by the government, we are focused on reducing taxes, to start with corporate taxes, then eventually income taxes, and then GST rationalization. So a lot of supply side reforms has enabled that, despite so much of turmoil, the local conditions as if that India is a island of stability. In fact, last policy governor said that we are in a Goldilocks scenario, and it's so different from a policy maker coming out of it, especially being emerging market country. Look at the countries around us, both from a geopolitical standpoint of view and also from a macro standpoint of view. We have seen what happened due to Russia conflict when the oil prices went up. We felt as nothing has happened. When COVID crisis came in, barring the initial 3-4 months blip, things actually settled down pretty fast. So all this is reason of the sole focus of macro stability, and fiscal budget is the single most important determinant of macro stability, because it impacts the kind of expenditure, inflation, the supply side reforms is predominantly driven from that part of it. And I think rightfully so, even this budget, at least barring the few I would say disappointments on equity side, on STT or maybe on debt side on the gross borrowing numbers, this just enforces that now we are here for the long term thinking rather than thinking short term, and which is why eventually each budget you will look like a statement of accounts, that is it. Whatever reforms are need to be there, government will not wait for every 1st Feb to come and announce it. They will do it as soon as they find a window of opportunity and they find a solution to it. So in my view, budget over a period of time will become more and more mundane, and reforms as and when needed, keeping in mind macro stability as a key factors, will be given by the government.
I hope I'll be able to come every year and talk to you. You're saying it's going to become mundane, so.
Yeah, but look.
No, I know, what you're saying is right. I mean, we don't work for one day in a year, right?
Yes.
So it's a continuous process.
Yes.
But you mentioned this gross borrowing number.
Yes.
The net borrowing seems the same, but the gross borrowing figure seems more
Yes.
than what was anticipated. So given that that is the case, how would you reposition yourself from an investment point in your debt funds?
So two ways to look at things, one is fundamental and second is technical. The fundamental point is that if macro stability is ensured, inflation is contained, ideally it should ensure that the cost of borrowing of the government does not increase. The technical part is just because of demand supply mismatch, because market was expecting some X amount of net and Y amount of gross, government broadly the numbers came very much similar to the net borrowing estimates. Of course, the gross borrowing number was Y plus something. Now which has led to some bit of a knee jerk that market as of now is worried that who is going to buy this additional supply. But from a bond market perspective, I think clearly the ball is in RBI court. As such, RBI has cut rate by 125 basis points in last 1 year, but if you see the yield curves have not budged at all. Clearly there is a transmission problem, and along with the transmission problem there is a problem in terms of duration supply, which has been the pain point for the market. To give you a flavor, average central government borrowing prior to COVID used to be closer to about 14 years. Today government is borrowing at average 19 years. Similarly, state government which used to borrow at on an average 10 years, now they are borrowing at 16 years. Now because the COVID rates were too low, it did not hurt us, because in between JP Morgan flows were coming up, again market did not bother much with this duration supply. Now both things behind us, because rates have normalized and of course bond inclusion index flows are behind us. Now market this year actually felt this demand supply mismatch of duration. So in my view, the heavy lifting needs to be done by RBI. RBI has done its bits in terms of rate cuts, but now they need to force these term premium to cool off. Once they get their act together, I think this additional gross supply will also get accommodated by market very easily.
And what would you expect the RBI to do in terms of decisions?
So of course we do have still some bit of space left in terms of rate cut, because our expectation of inflation is still benign. But beyond rate cuts, I think, and they need to convince market that they are not comfortable with this level of term premium, because the entire good work of sticking to fiscal consolidation path, it gets unwounded with this kind of supply. So second and most important thing beyond the obvious rate cuts that could come in is on the tweaking the supply calendar, and they need to be complemented with large OMO buys so as to target these term premiums which are extraordinarily large with respect to the historical perspective. So if they, in my view, they take all these three things together, most likely what we will see is much lower term premiums which are very steep today, and rates will settle lower.
Harish, let's talk earnings. And one more question before that. The finance minister outlined 7 sectors as key thrust areas. Were you already invested in these sectors, or as a fund manager you would want to look at these more closely because the government's got its wings, because whether it's semiconductors, they've all been talked about. globally.
Yeah.
But has anything changed for you as far as your position in these 7 areas is concerned?
Yes and no, in the sense that we are always appreciative of new vectors of demand creation that come through, and therefore from a budget point of view, from a policy point of view, there is definitely a greater thrust on these few strategic areas, both from a indigenization as well as from a security perspective, as well as from a function of competitiveness that we eventually desire for an economy as a whole. So it's kind of solving for both of these things, and therefore we know that in many of these sectors there is going to be a government support or a government put, if you may, which is going to keep coming through whenever there are going to be challenges, and every business goes through these challenges every now and then. So from that perspective, can the risk premiums that one may have had for these sectors come off a bit? Absolutely yes. But I think many of us look at only one side of the equation without looking at the other, right? Which is that we are always focused on the demand side creation, which is how much more is going to be spent, how is this going to be channelized, etc., etc., and that's very important. But at least our thinking has always been that in a country like India, okay, where purchasing power is reasonably low and it is growing very fast, penetration levels in almost every category is low, okay, the demand is a given. Yes, if in certain sectors it might happen in 5 years, in certain other sectors it might happen in 7-8 years. So it is not about this demand or the or a doubt of whether demand is going to happen or not that is going to drive the investment call. It is rather to focus on the supply side. Now what is supply side? Which is competitive activity, because if this demand is out there in the open, it is not that there are only one company which is doing it. For example, in the semiconductor PLI scheme that has been, there are some 249 companies which are now applied for this PLI benefit. Now is it needed? Absolutely yes, but when there is so much of catalyzing of supply, do returns necessarily come to every one of them? Possibly not, right? So therefore our focus has always been in sectors to look at from the supply side, which is competitive activity, which is in terms of where is the new capacity starting to create, or to look at who are doing things differently compared to the rest of them, because all of them have got government support, right? But within that also there are these shades of grey or nuances which we may need to decipher upon, right? Who's got the lowest cost within that particular segment, because then they will be able to push through even higher volumes and can have a greater share. So that really is our focal point. And the third thing that we as market participants also realize is that we need to look at areas where ownership is not very, very high, because one is to say that over the course of the last 5 years, India's semiconductor or India PLI benefit for electronics has been one of the greatest talking points. The fact that Apple's supply chains have come to India and we are kind of exporting almost a significant amount of Apple phones, that's all known. Yes, are there great companies out there? Absolutely yes, no doubt about it, okay. But the reality is that this appreciation of the story has already been implicit into the price over the course of the last 4 or 5 years, and positioning of these spaces are also quite excessive, right. On the other hand, let's take another example of a sector just to make a point, which otherwise gets spoken about in almost every budget and almost invariably in the last 4 or 5 years has seen a negative reaction of sorts. Let's take the case of, say, the insurance sector, okay. Almost every budget there has been something. This time there has been no talk of the insurance in the budget per se. Now in a space which is completely out of favor, in a space where 5 years back, if you think about it, almost every large corporate wanted to set up an insurance company. Today you are seeing consolidation within that space. You are seeing the big 3, 4 gaining greater and greater market share, right. And so while there is always going to be challenges which are going to be there of the here and now, I think the greater value is created in the terminal value of what the market size can be, say, 5, 10 years later, and which are the companies which are doing things differently, and if I can back them up in these points, that is where my pace of compounding tends to be faster over the course of the next 4 or 5 years. So
and this is irrespective of sector.
Yeah, so that's the other part.
Because you're looking at a business.
That's right. So especially in difficult times, identifying companies which are doing different things, okay, invariably pays off, when, because these headwinds do not remain headwinds forever. There will be times when they will become tailwinds, and at that point of time this greater focus and customer obsession of these companies will mean that they have a greater mind share during difficult times. That gets translated into higher market share, that will get translated into higher revenue share, and that will eventually get translated into higher profit pool share, and eventually that will get translated into higher market cap share. That to us is the arc. So identify companies which are doing different things, are focused on the customer, because it is ultimately the customer that pays the money. It is not the government, it is not all of these policies. These are enabling frameworks. You want the customer who is wanting to have you in their lives and wanting to see that you are providing me value, and for that I am willing to pay you something, right. And if I can see that journey over the course of the next 4, 5, 6 years, for sure these enabling environments are important, but for me that becomes the pivotal point to look at across sectors.
What about earnings? Do you see them? I mean, there was a lot of talk that the quarter which we are currently in will see the turnaround, but then probably because of one of the reasons was the labor code, and a lot of companies had to provide for that.
Right.
Is the worst over there? Are we at all going to start seeing an uptick now, or?
We definitely are positively biased in terms of earnings growth for broadly 3 key reasons, right. First is of course the base is very low. The fact that the whole of last year we have been in single digit earnings growth does provide a base for an acceleration, that goes without saying, right. But like I said, the policy resets that we have seen over the course of the last 2-3 years or the last 18 months or so, which has been focused on the domestic consumer. There has been demand that is kind of getting catalyzed by greater government spending as well as the consumption is concerned. Secondly, you have got the transmission of RBI's policy rates that should lead to a higher credit growth, and with that should further ease that overall cycle over there, right. The third aspect which not many people speak a lot about is actually currency. Okay, and currency is generally seen, a rupee weakness is generally seen as a negative factor, because yes, for sure for a foreign investor, whatever good things that the local currency is doing or the local company is doing in local currency gets completely offset, because they measure it in their currencies, and when you have seen a weaker currency, it kind of takes away all the zing of what they are making from the local markets. But for an Indian investor, on the other hand, currency actually is a massive tailwind. Okay, why is that? What we have seen is that almost 55 to 60% of the top line of India, the revenue pool of India, is in some sense positively linked to weaker rupee. Think about energy, think about metals, think about auto ancillary.
50 to 55%.
Yeah, IT, pharma. So the revenue pool is actually in some sense dollarized. I mean, it is not quoted on a daily basis,
totally,
but there is a positive skew whenever rupee kind of depreciates, right. Now obviously during the fall of the rupee depreciation, there is a lot of worry and angst, because there are also sometimes borrowings in foreign currencies, cost in foreign currencies that need to be adjusted. But once we get into a phase of stabilization, that is where this entire revenue pool kind of accretes to a higher earnings base, even as margins might be a little lesser. So if you look at, I mean, you started out saying that earnings has been weak. Okay, I think if you look at the last 18 months or so, the biggest problem for earnings in India has been weak top line growth. It has not been margins. Margins have been doing exceptionally well, right. Now when you see that nominal growth itself, which is expected to go from 8 to say 10 as given by the budget and possibly higher, and you've got say a weakening currency, all of that would mean that you actually are going to see top line growth coming back into the system once the rupee kind of stabilizes. So I think a combination of these 3 things would mean that over the course of the next 18-24 months, we should be at a higher trajectory than what we were in the last 12 months. However, the key is how much of this is already priced in, because that's the area that we are in. I think a significant amount is priced in, but there is still today a kind of a disbelief that and as and when these numbers start coming through, I would think that markets will have greater confidence in that India story, which we are definitely convinced on, and which is why we think that this is a great opportunity to add to equities from a medium to slightly longer term horizon, which is essentially the framework that we have from an asset allocation point of view.
Kaustubh, what should be the expectation of an investor when they are now putting in money in a debt fund, I mean, of course, debt fund is not one fund. There are so many, and now hybrids are the,
Yes.
a big story where a debt is a very important part. Asset allocation funds are where the debt has a very important part. So I know I can't categorize, but if you were to take certain duration, like say a liquid fund or an income fund, given what you have seen in the budget, given whatever you have talked about in terms of how you see things panning out, what kind of return expectations
So look,
should people have?
of course, because the entire curve, as I told you, that is elevated. Effectively, last 125 basis of rate cut has not been passed on, at least in capital market, and which is why right from 3-month CDs to 10-year corporate bond, everything is available between 7 to 7.5. That's the range. Now we do expect that RBI should force monetary policy transmission, and as and when that happens, the entire curve will become more steep, and the curve will settle lower, anywhere between 50 to 100 basis point over course of next 1 year. For an investor, I think given the uncertain environment we are in, probably it makes sense that he should align his investment allocation or choice of fund basis his ALM, that if he has a 3-month money, of course the choice of instrument should be money market, ultra short term, low duration. If he has a 1-month, 2-month money, it could make more sense, and the long term money should come to corporate bonds, income funds and short term fund as a category, so and so forth. Now only thing is there is the market, because the markets are fairly cheap valued, there is a case for duration, but because of sentiments both globally and locally is against fixed income, and now because as I told you that wall is in the court of RBI that they need to force it, we will have walls in across our investment vehicles. So the better way to assess walls or to address walls is you align your ALM. If you have a long term, go to the long term asset allocation. If you have a long term money, if you have a short term money, stick to the shorter end of the curve. But broadly, that's because the entire curve is between 7 to 7.5. What you should expect more or less that by aligning your ALM, you should get returns very much closer to these levels in yield curve.
But then you are saying in both these cases, it's a good place to enter, right?
Yeah.
Now,
So from
if you have that kind of a time.
From a spread perspective, to give you a flavor, today even the term spreads, which is liquidity spreads, they are highest since 2018, which is repo and to a point spreads. Now remember in 2017-18 we were undergoing through some bit of credit crisis, and which is why the term spreads had a lot of credit element in it, which is credit spreads. Today both banking balance sheets and corporate balance sheets, they are kind of pristine, which means that entire spread is liquidity spread. Now if you have to look when these kind of liquidity spreads were there, you have to go back to 2008 compared to repo rates. Now in 2008 or 7 rather, RBI was in a hiking cycle. IV Reddy, doctor, he was making sure that the economy slowed down. Today the efforts of policymakers is to accelerate growth, right? Today inflation is not a problem. At that time the retail CPI was in double digit. So clearly the problem of 2025 is monetary policy transmission, that you have done so much of rate easing and you have done so much of OMO, but rates are refusing to budge down. So I think 2026 is all about focusing on transmission of past acts. Like in budget, when we talk about, we say that we have already cut taxes, corporate tax have been eased, income tax has been eased, GST has been rationalized. So market entered this budget with a muted expectation. Similarly, from a headline perspective, RBI has eased rates, so the space is minimal, but there is a space. Regulatory easing, lot of easing has done in 2025, but what has not been passed on is this transmission channel which is blocked. So the entire policy making thrust in 2025 will be on monetary policy transmission, making sure that the thrust which is blocking this transmission channel to pass to the economic agents, it is passed on efficiently.
Thank you very much, Harish.
Thank you
Thank you, Kaustubh, for
Thank
that
you.
wonderful perspective. So very clearly, we've heard two very, very significant market voices who actually manage money. Both seem fairly bullish in terms of where things are going from here on. Some brilliant perspective there on how you need to cut out the noise, see things differently. Budgets will come, events will come and go. At the end of the day, you have to see inward in terms of what you are comfortable with, what is the investment positioning you want to take, as Kaustubh said, what is the asset liability mismatch, right?
Yes.
The ALM, what is the risk you can take, but Bala made a very important point, you just have to keep at it. Events, as I said, will come and go, budgets will come and go, but you have to stay the course if you want to really see the benefits of the ups. You have to ride through the falls as well. Thank you very much for watching this. For me personally, a very, very overwhelming experience to be sitting in a room full of top investment experts who are managing more than 4.5 lakh crore. Have done a lot of budgets from newsrooms, but it's a first for me to be sitting actually where all the action is. So thank you very much for watching this episode of Budget Simple Hai, not episode, this live session. We do hope you enjoyed it, and we will continue to bring you many more of such sessions going forward. Thank you.